Hello everyone, welcome to DMV Innovative Investment Live. The recap of this stream will be available in the DMVII Live Recap playlist. Keep in mind, stocks and strategies discussed here are for information only. Do not treat any information provided here as investment advice or recommendation. It is up to the individual investor to perform the due diligence prior to investing in any company. And here is the live stream from this week's meetup session.
Okay, well, we're getting to 11:30. So you want to kick away? You're in the hotspot, or you want to pass and go? I mean, what's your feeling? So you're in the hot seat.
Sure, I'll start.
Okay.
So this week I didn't add any new positions or adjust any, but I'm still looking at the overall macro events. And then I start reading a lot of articles, at least in the Chinese news. They start talking about a lot of the what they so-called professionals. They're all scared about the Chinese economy right now, especially in the housing bubble, and a lot of the wealthy individuals there, they're liquidating their real estate assets. So that's a interesting phenomenon that's going on there. I don't know how that's going to affect U.S. And other than that, I'm still, any one of you listen to Janet Yellen's talk on Friday? There wasn't really that much going on there, unless you guys picked up something.
I think she's doing a great job. Trump ought to reappoint her.
Yeah, there was another article that was talking about how she says that a lot of the financial regulation is actually very good for the overall economy, was Trump is trying to deregulate all of that. So there is a slight conflict going on between Trump's agenda and Yellen's.
That's true. There was a commentary yesterday that essentially Yellen wrote a resignation letter by saying that after the Great Recession, the measures that were put in place, the regulation that was put in place, was very beneficial. So he's 100% for the regulator, Dodd-Frank. So that was kind of a resignation. He said, Trump, I love you, but I think differently in that sense. If you're going to really take off all the regulation, of course he's not going to take off the. I think about taking off the regulations are going to be improved that.
Yeah. So other than that, I'll say I closed up my Google position that I opened up like 2 weeks ago. That was like for last week, since I wasn't here last week, so I just filled out on my last week, so 2 weeks ago.
Yeah, there was a development last week for Wei.
Yeah, so that's I closed it somewhere when the volatility dropped pretty significantly. So that was a volatility play where I sold the in the money call at I believe was 150, and then when the stock was trading somewhere like 920-ish, and they went up to like 930, and then there was volatility contraction on top of the intrinsic value gain, so I just closed it for a profit. It was just one contract, but it adds up just because the underlying is so expensive. Yeah, so some other position I'm holding right now, it's for the new people here, is I'm holding Orbotech, that's ORBK, and
So way on Google, there's a fundamental narrative going on that Google, obviously, and Facebook depend on advertising. They're essentially an advertising house. Google is a little more diversified, really, with the auto driving and all that stuff. But with the advent of voice-activated artificial intelligence, for instance, the Amazon product now, you're in your living room. Gee, I think I need more toilet paper, honey, and then Alexa is listening. I'm going to order that for you right now. That means you don't have to go on the cell and watch the advertising.
Yep.
So there's less risk. So it's the kind of narrative says that the Google model, the Facebook of the advertising that you read might be decaying a bit. I don't know if anybody's onto that, but so when you see profit potentials from Google going forward in the ad space, maybe not at the growth that you might think because of this. What's that?
Okay, is that it for anyway with one more?
Yeah, I can add in one more Adobe just because
Okay.
that's ADBE. That's another one that I like very much just because they're very sticky in terms of the software and the creative suite.
So no yield on it.
Yep, just because the company itself it generates revenues from a lot of the subscription base for. I'm pretty sure you guys are all familiar with the Photoshop. It's kind of like a verb now. You gotta Photoshop that, and or even use Adobe Premiere to edit all the videos. So since I post on YouTube videos, I noticed a lot of the professionals are all using this and collaborating using Adobe products. So they're pretty sticky in this business. And so I'll just leave you with those two, Overtech and Adobe.
All right. Well, all right. Next, we'll go to Kate.
Okay, so a stock that I bought recently was iRobot, and I got it after the jump, which was not the best, but I got it thinking, so they make the Roomba, which is that little vacuum cleaner that's
iRobot, I guess.
Yeah, IRBT, I think. And so just with the generations getting older, with the baby boomers and everything like that, I know my parents are talking about getting a Roomba. My brother, not older generation, but he just recently got one. And so I'm just looking at it as kind of like the cell phones in the early 90s, where it's like, oh, well, that's just like, that's fancy and nobody really needs an electronic robot that does the work, but I think more and more people are going to kind of go in that direction, and it's going to be something like, okay, well, so I think there's potential for that company because of that reason. And I'm also looking to get into more dividend stocks because this was kind of the dividend season, and I saw all those and was like, that's nice. So I'm maybe gonna do more investing in dividend yielding stocks as well.
You look at any particular issues in there? AT&T or Verizon or anything? You're looking at above percentage of dividend yield, like 3% or above, or
right? Yeah, something like that. There's the dividend aristocrat stocks, and it's a group of 25 stocks that have increasing dividends over the past 20 years or something. No, it's just a group
Sort of
of
a nifty 50 type of list.
yeah, something like that. And so, like, there's Coca-Cola, I think McDonald's. There's a REIT in there that's HCP, which is healthcare properties. So they invest in exactly that, in healthcare properties.
and that's called what now? Aristocrat?
Dividend aristocrats is what they're called.
You can Google that, I guess.
Yeah. Googleable. So that's just another direction, besides the iRobot, which I see potential for growth in. So that's conclusion what I have to contribute.
Okay. All right. Next, the gentleman there.
So you'll have to explain how this game works to me. This is my first time here. So.
Okay, yeah, and that's just, we have it's evolved to this kind of a session where people will come in, used to have outside speakers years ago, and that sort of got petered out, and it became, so everybody just came in because they wanted to hear each other's thinking and all that. We sort of adopted this practice of saying what you've done the last week or so in your investing strategy and what you're planning to do in the coming week, or you don't want to do that, you just say pass, or I said I want to hear, or just whatever you might want to do if you don't want to share what you've done last week or are planning to do next week, or it's very loosey goosey. You wing it, and everybody has their certain time to what they want to do, or want to pass on to somebody else, and then people kind of shoot at it if there's something they are wondering about or whatnot, or otherwise it moves on.
Or you can talk about economic trends that you've noticed or certain products.
Whatever you're thinking that others might want to know what you're thinking about.
Well, okay, that's a lot. Let's see.
Sure, you only got an hour.
Oh, you want to pass?
Yeah.
I mean, I'm hitting you cold, so maybe you want to pass then?
Yeah. So I'll go last. How about that?
All right, Hector, you're next.
Yeah, I was switching. You took a little time so I can prepare one. Yeah.
Whatever you want to.
I took up some positions in small positions in the retail space. Macy's, Amazon Macy's. Sold some puts in Macy's. It kind of rebounded. I think the XRT, which is the retail ETF XRT, but it's kind of going as far as low as it might go
Yes,
for
you
a
know
while.
that, I'm sure.
It's got a nice dividend. Look at that, Gary. What dividend is that?
7% yield. Right.
7.3. Wow. And I hear that dividend is pretty solid. Although, as you can see from the chart, it's been going downhill quite a bit. You know,
Not the
that's
opposite of a Vince chart.
That's not a Vince chart, no.
Right.
No, you want to see a little more momentum going on. But you think with 7% yield, the company's assets are worth a bit more. They have a lot of real estate assets. So that's an opportunity there. The other one that I looked at was Foot Locker, FL. Took a really big dive. Foot Locker.
That's
and
not
Foot
likely to have a
Locker.
good Vince chart either, but we'll
FL.
see.
That took a big dive on earnings and
See big
and
gaps
outlook.
here.
Right. And their outlook was not all that great, but
It validates with the high
Right.
volume, that it sort of validates that.
right. So I normally sell puts against this. I don't know if you but it's a technique that uses to sell premium into that. I don't buy the stock itself, but I sell put premium into it so that if it goes below a certain point, that I'm forced to buy it. Well, at that point, we'll roll it over and avoid that. But we can see some. If I think I sold it at like 32, so I don't see that going below 32 at this point, right? For a month until October 20th is the strike month. So in a month and a half, I don't see that going much lower than it is now. And if it stays there or goes to 32, I still collect the full premium.
It looks like the whole, I guess, footwear business isn't doing too well after
Right.
that quarter of earning. Like if you look at Nike as well, right? They didn't do too hot.
And Under Armour is another one.
Oh, yeah.
Now, what I just mentioned about the put selling, I got caught. Sometimes you do get caught. Under Armour, I had sold some puts. I believe there were 20 UA. Yeah, I believe it was 19 or 20. And I was put some shares of stock. So I immediately
That's
saw,
not nearly as bad as the chart. It's
and as you can see, it kept on going down. But I sold some calls against it.
No yield on it.
No. But I saw some calls against it to mitigate the losses, and I'm holding it. There'll be a rebound at some point, but you're right, their shoe business is not doing so well. And so those are two of the retail plays. I did take another position on Costco. It took a dive. Once again, Costco took a dive. COST. On the news that Amazon is consummating the deal with Whole Foods and now is going to sell milk and bread for
That
nothing.
had a big swing in
Right.
that day. You didn't have your gap,
Right.
but you had a big.
Right. So I took the opportunity to sell some premium there.
Line. See, you have another one
I
here.
was strike.
Big gap, so in high
in the
volume, so you
140s.
never had it filled.
Oh.
So I sold puts in the high, I think 146 or 148. And right now it's at it's 152. So what I do is take them out, Garrett.
1.3% yield, so it's a little something for Costco.
So I take it like a deviation, what they call a standard deviation, about 25, 30. Hey, how you
Hey, thanks.
And so I saw the puts at about 148, I believe. That's kind of a safe place for me. So it's a rather somewhat conservative strategy, right? I did Coca-Cola. I did sell some puts on Coca-Cola. Not an exciting stock, but one that doesn't move that much, and you can collect some premium. Kansas City
That
Southern.
looks a little better, Vince, maybe not you
Right.
too. I mean, you don't think that's too bad, do you, Vince? Is Coca-Cola?
Yeah, it's been going up.
Yeah.
Yeah.
Okay.
And yeah, let's see.
Coca-Cola is generally a stable company.
Okay.
Kansas City.
What's the symbol on that?
KSU, Kansas Southern
A railroad?
is a railroad. Very exciting stuff here. But it's being touted by a guy on CNBC, Fast Money. His name is Josh Brown. Everybody hear of Josh Brown? Very well regarded analyst.
Oh, you.
And
His recommendation is good.
what's that?
Usually his recommendation is good.
Oh yeah. You know, no, he's good, and he recommends this. It took a little dive, so I sold some puts on that. And
Josh Brown, okay.
right. See, our favorite NVDA has had a drawdown a little bit, and NVDA presents an opportunity here. I sold some. This is how conservative I am. I believe it's the 140 puts that I sold on this one. You know, anybody see this thing going to 140? Well, yeah, maybe if China implodes or whatever. But it's pretty safe to sell some puts with some very rich premium.
They have a loom dividend.
So to give you an idea, Gary, to give you an idea what the premium that you're collecting on this, I believe it's a 140, 135 put spread. And that's a $500 difference between 135 and 500. So I'm collecting about $60 per contract. And this is an October 20 expiration, which is 6 weeks. So you take $60, you divide it by 50, you multiply by 365, and you divide it by days to expiration, which is about 52. You come out with an exquisite 60 or so % annual return. 60%. Wouldn't you like to have that 60% return, right? If it stays about 140. So that's the kind of money you can make. That's the kind of money you can lose too, because if it goes below below 135, I'm out $500 minus the 60, so I'm out 440, right? So you can lose.
Yeah, so
For those gamers at home,
a
right?
good way you can essentially track how the company is going to perform is look at the all the software developers and the growth in this programming language called TensorFlow. That's basically what people are using to program all these FPGAs. And so like the way that I've been looking at how NVIDIA or a lot of this like AI growth is going, it's look at it some academic research or even some universities, a lot of them are cranking up total amount of the courses they offer for machine learning.
Okay.
And all of that basically they need to use the hardware GPUs. So if it's not NVIDIA, it will be AMD using their Vega GPUs.
Yeah, I hear those voice-activated home, like Alexa
Yeah,
and Google. I think they also use NVIDIA, I believe. Is that correct? Some of their artificial intelligence machines that they do as well.
probably on the server side.
On the server side.
Yeah.
Right.
Yeah, so that's a
to
good way
infer.
to gauge the interest, right? Like if the company is going to continue to create revenue, it will be basically those people graduating from school and the companies and businesses showing interest in still in the TensorFlow machine learning language or even any other language that people are developing today. So it's just something that, as an indicator to see when might be a good time for you to bail on NVIDIA.
So is that it for you, Hector?
Just two more quick ones is Square, SQ. Square, is it Jerry Dorsey? The guy who created Twitter. He also created Square. This took a little, see there's a buying opportunity. They are into the, frankly, I can't articulate to you what they do. They provide payment mechanisms for small businesses, right? But it's you can see that chart has been going gangbusters, has taken a little rest here, but there's an opportunity to sell some premium on that too with puts. And Walmart is the last one I'll give you for now. Walmart also took a hit from the Amazon acquisition of Whole Foods, and there's an opportunity for little dip there to get in on Walmart because they're they're well positioned with
They're at
Jet.com.
2.6, so you're getting a little something for Walmart.
So they're well positioned with Jet.com to go on the internet and fight it out with them.
Down here.
And I yield the balance of my time to my colleague to the left.
Okay, the next gentleman next to you.
Morning. So first time like gentleman here. I've been on cash or in cash for a long time
Uh-huh.
due to work. So starting to want to get back into investing. So that's why I'm here.
Okay,
So-
that's what we wanna know, what you think, and, you know, whatever it is, that's what we wanna know, what you think, cause nobody knows the truth, even though they look, now let's face it, people talk a good game, but hey, reality is sometimes different, what people think. But it's what we wanna know is what you think, so, thanks for sharing that thought. Next to you?
Okay. So it's good to be back, guys.
Yeah, no,
I
I'm glad to have you.
There was a gentleman who made a recommendation for stocks. Whenever I hear a recommendation, I just buy little holdings. This one's actually doing quite well. It's TUR. And I don't know if you guys remember this gentleman. He's
Give me that again.
TUR.
CUR.
T. That's
Tango.
Tango. Yeah, Tango.
Okay.
Umbrella.
Tango, Uncle Roger?
Roger. Or something like that. So this is there's been talk about Turkey.
Oh, yeah,
And
yeah.
you guys remember him? Yeah, yeah. So I actually wish I bought more.
Right.
Because he was talking about Turkey for a while.
This is true.
Yeah.
This came out a couple of months ago. They do well this summer.
Yeah.
It's a kind of a cyclical thing. Summertime is great.
You know, that's got a little bit of yield, 1.8.
It's tourist season? Is that what drives it up?
I really don't know.
Because every year.
Yeah. He's more of an expert. I hope that he was here, but he's not here. So, but I did purchase a few of the stocks just to track it. As you know, it looks like it's doing quite well. I don't know very much about it, but it's a Turkey fund.
Yeah.
iShares. I don't know much more.
Yeah, just invest in the major stocks in Turkey, like you have the Europe and Germany and Japan.
Yeah, so obviously Turkey's doing well. I have another recommendation, experimental recommendation that I've heard and made some money on. The next one was AMT. AMT, I've been with this for about three weeks, but I've mentioned it a few times. This is like a REIT that I think some of the growth that you're seeing now is because they have a lot of property in Africa. So I think this is a Vince chart.
Yeah, nothing but up.
I think you approve.
1.7% yield.
Yeah.
We should talk about this
American
back in
Tower,
July.
I mean, I guess I don't recall hearing about that before, so.
Yeah. So this was brought up a few times in the group, but they're a REIT company that has REITs throughout North America. But my interest in this company is primarily because of Africa, because there's a potential for myself and a friend doing a land development in Africa. So I figured I would put my money where my mouth is, try out the REIT, and it's been doing really well. So
Yeah, for REITs now, well, you actually expect a higher dividend. It's 1 point, is that right? 1.7?
So this is a infrastructure REIT. They do cell phone towers. So there's a number of these that are kind of in a high growth phase in preparation for 5G deployment. So the yield on a lot of these infrastructure REITs that are doing cell phone towers or data centers is lower because people are expecting growth.
This high growth potential, yeah.
So if you look at their PE,
Nigeria,
it's
this
pretty
is where
high.
they're building these towers. So Africa has a boom because most of the technology deals with mobile applications.
Yeah.
And so they do most of their banking through the mobile phone. So it coincides with the others.
Okay, is that it for you all?
I think I have one more as a recommendation. So, just some things that you guys can make money on if you want to jump on. I'm watching WCN. I've been in and out of this for a while, but this is one of my more experimental stocks.
How'd you come upon it, anyway?
Yeah, WCN.
Whiskey Charlie November.
And I've mentioned this to the group a few times. It hasn't really panned out the way that I
Waste
thought.
Connections, huh?
Yeah, it hasn't panned out the way that I
7% yield.
expected it. It's sort of consolidating now, but I've discussed the future being a world of lack of water, and Waste Management has gotten into water purification. They've been into it for a while. So I had a water purification company stocks, like a small portfolio of those guys, and Waste Management on the other side. And I was thinking that they would really do something magical, but it hasn't happened. And like I said, we've been talking about these stocks probably for this one in particular for about a year. and it hasn't really performed,
Well, it
but
looks like it's ready for a breakout.
yeah, that's why I'm
Trade
bringing it up
range
today.
there.
That's why I'm bringing it back up today, and I'm glad you said
Kind of
that.
a double top there in June and
Yeah.
August, but going to break out to that.
So I did read some articles about this water treatment thing. They were talking about it's not the lack of shortage of the water; it's actually the efficiency of the purification. And I think it might be useful to look into the technology that's that's essentially doing the purification, because they can improve the efficiency of that process. Then these companies will do well. So I don't know. There might be some companies out there that might essentially be doing this level of like could be solar energy or whatever energy that they're going to leverage on to create I guess pure water or consumable water.
Tidal energy would make a lot of sense because if they're desalinized,
Yeah, because I mean we do have a lot of water. It's not cost effective because I think you have to spend like I just like we call them like 5 cents per 5 cents per watt or something to create a forget like a gallon or something of water or something along that line. Don't quote me on that, but I think there's underlying technology somewhere.
I think last year California had a drought, so be it from the West Coast, I saw the stocks sort of incline because they're doing desalinization. They have purification factories on the West Coast, and they built a few more near my mom's house. So I figured that this would be.
Could help out in Texas right now.
That's right. Don't say it's mentioned Texas. We know that anybody hedging for the hurricane would be a great discussion. But my last thing will say, gentlemen, I'm going to have to mention this before I leave, but we have our Bitcoin doing quite well, better than expected. $4,300 basically per coin. So yeah, vacation is coming soon.
Okay. Well, congratulations.
Retirement is coming soon.
Vacation.
Okay.
Thank you, guys.
All right, so Don, you're next.
FDIC just released a quarterly press release on bank situation. I'll go and give a real quick overview. Quarterly net income is up 10.7% over a year ago. Community bank net income is 8.5% up from a year ago. Average return on assets of 1.14% is highest in 10 years. Total loans and leases increased 3.7% from a year earlier. I went through about 50 stocks trying to find something to buy. Every one of them had raised their dividends. 90% of them had been going downhill. How they raise their dividends when they're going downhill, I don't know, but it was an interesting little drill. But I did find two that I wanted, so I bought Alpha Bravo.
Alpha Bravo? Never heard of that one. That sounds like it, but the symbol means it could be big. I don't know. What is it? It's Alliance Bernstein holding for it. Okay.
And Alpha Romeo Romeo.
Is that what, 8%
yeah.
dividend? Is that 0?
Well, now it's 8.5%
Wow.
yield. Wow. Caption's down, high volume, and then it's reversing. Dividend is huge there. Wow. So how'd you come upon those?
Like I say, I will look through a listing of companies that had been raising their dividends on a regular basis. And these were the only two that seemed to be in good shape. That's
Looks
it.
to you like they can cover that?
Yeah.
The dividend?
Yeah.
Okay, is
That's
that
it.
everything for you now?
Yep.
Rick, you're next.
I added to my holding in Las Vegas Sands.
Yeah.
The price has been, it's LVS. The price has been a little squishy lately, but one advantage of that is the dividend is now over
Now, almost
4.5%.
5% dividend. Okay.
I think I understand how their business works. Basically, they make money for people's desires or vices or however you want to put it. I am kind of concerned that they get 70% of their income, or I think it's 70% of their income from Macau. So there's a certain political component to this, but if the United States and China go to war, there will be worse things to worry about.
Yeah, I don't think that
Stuff.
too many people are gonna worry about what happens to Las Vegas Sands in Macau, but yeah.
Can I ask you, can you bring up WINN, which is also in the casino space? It looks like the same kind of chart.
Talking about Wing Resorts?
Win Resorts, WINN.
It's
Y.
W-Y.
Yeah.
Sorry, what did I say?
WY. So it's WY.
WYNN. Sorry, WY. Yeah, that does look a little bit better. Yeah, because they're also in
That is
Macau.
only a 1.4%.
Yeah, okay, thanks. Yeah, okay.
You do a comparison between the Las Vegas and
So, yeah, LVS might be a better opportunity, right? It's lower. Who knows? Yeah, thanks.
Okay, is that it then for you, Rick?
Except that with LVS, I am considering doing my first ever option play, selling a call, a covered call against it. But I have to decide, strike price and how long out, and in the money or out of the money. And
Everybody want to sell it at least 1% out of the money, so it gives you a little bit of room. I'll get that 1% sell.
what,
So,
would somebody explain to me why would a buyer buy at a strike that's lower than the current?
only if it has enough
price?
premium that it gets above the current price. If you think it's going to continue to stay flat, for instance, if you sell it right now at 60 right there, and you sell at 58 is what you're talking about. If you sell at 58 strike, if that 58 strike has enough premium to go above the 60 to, let's say, 61, 60 and a half. If the LVS going to go to 100, you're going to collect just the extra 50 cents, but you're going to make a little money. But you're protecting yourself against a downdraft to 58 at that point, if you're really kind of cautious about it. But generally, I would say 1% at least. 1% would be 60 cents. So at least do a 61, 62. Which is probably at 2%, right? 2% above that price. You want to go to sell a 61 and a half or 62 on October 20th. And you want to sell the closer to today, the richer the premium. So this, if you're looking at October, it'll give you richer premium on an annualized basis than a November or December premium. So you want to sell the October for richer premium.
So you're trying to figure out why would anyone buy that call option from you, right?
One that's
buy or
one
sell
that's
it.
lower. Why? Yeah, I'm
A
looking
call
at
price
the other
that's
side. of
lower
this.
than its
Yeah.
trading price, yeah.
Yeah.
No.
So,
Okay, that was a different question. Okay.
so let's say you're trying to sell a call option to collect some premium. Let's say it's $100. So the other person wants to buy that from you. It's because they only have to pay $100 to assume underlying of 100 of the underlying stock with just the cost of 100. So if it blows up to like $1,000 increase, they only put $100 to have all that upside potential. That's the reason why they
I
would.
see. So,
Yeah.
so the lower the strike for the buyer, the more that they make if
Yeah,
it really
yeah.
shoots up.
But
Yeah,
the higher the
and
price,
you're paying
they
more.
pay you.
Yeah.
Okay. Well, thank you. That's
All
it.
right, is that it then for you, Rick?
Yes.
All righty, next one.
Lindy, yes. Just something that happened to me a while back. I bought my mother an amplifier for her hearing. I bought it off of Amazon. It was Easy Us Life. she was just so thrilled and so tickled. She could hear so much better.
Oh.
Then she told me she needed, that they weren't working after a while and she needed another one. So I went back to my history, went to buy ECS Live hearing amplifier. They're no longer available. So I bought something different. I don't remember what it was. It kind of had a German sounding name and it had pretty good ratings. When we got it, she said it didn't work good at all. It amplified, but everything was so blurred she couldn't understand the words.
Fidelity is poor, yeah.
Yeah. So what happened was, I started thinking about it. Because I went back, this was no longer available from EZS Live, no longer available. And I thought, I wonder if they kind of left Amazon and went out on their own. So I just typed in EZS Live and bingo, there's exactly what I bought her, like a year and a half ago. It makes me wonder, companies are paying a lot of money to sell their products on Amazon. They pay a certain percentage or whatever. Plus, I think now they're charging companies storage fees per cubic foot. I mean, Amazon's kind of sucking these companies dry in any which way they can to.
They want the profit, and the companies don't like that Amazon gets all the profit.
And I looked at that one time. If you don't sell a product for at least like $20, what they get, like $10 plus, plus, it's really not even worth it. So I don't know. It just makes me wonder, how many companies actually leave Amazon? They probably get a following. Like people bought these hearing amplifiers, thousands of them. They're really happy with them. Once they have a following, they say, hey, I don't need to pay Amazon that profit. I'll just go, we'll just have our own company.
On the other side of that, you just saw two big moves by Sears Holdings to start selling their refrigerators, the Kenmore line, through Amazon. Also saw Nike signing up with Amazon. So the trend, the companies want to sell their stuff through.
Or it makes me wonder when a company will challenge Amazon and say, okay, we're going to sell all these products, but we're going to do it, we're not even going to charge you cubic storage fees for your product.
Walmart is in that position for that.
Uh-huh.
That's a very interesting Amazon story. I had a similar situation with a friend of mine wanted his daughters over the summer to start selling on Amazon. Ended up purchasing from China some stress relief, something, I don't know what it is. Ended up posting it on Amazon, paying for delivery to his home from China for 100 units. Then shipped those 100 units to some storage Amazon place in Chicago. Then to find out that you couldn't find him on Amazon because the Chinese company then underbid him for the product they actually sold him. I could not find his product. In fact, it was so hard to find the product that he's selling because it was exactly the same product as advertised. And that company was paying Amazon to push. Unbelievable. So I really put me off Amazon, and then that your story is interesting too. So
yeah, the interesting thing about Amazon, they're not all that interested in making profits these days. They say, right? They want to put all the money into future growth, and come that quarter, their profits are not all that great.
Well, when they're a monopoly, they'll make a lot of profit.
I know. Right, they make some, but they are expending all those profits in future growth.
Also, I found out you cannot sort on Amazon easily by price. I lost the S Pen from this phone. I googled Note 5 S Pen. I get tons of hits. I want to sort by price. No way. You cannot sort by price, which you can on eBay, which I'm familiar with. And then I found out, yes, you can, but you have to go to departments. So you have to go to, you want to purchase from the electronic department, you purchase it, then you go to the department. So they make it hard to sort by price. So I'm just, I know Amazon stock is great, and I know somebody here a few months ago suggested to buy them, and they were 600, and they were right. But I just so much off it, and I think
you think they have an algorithm to put in front the companies that are paying Amazon?
Yeah. They make it very hard to find the lowest price. And so you can sort by color, you can't sort by price unless you go to the department. But then the department doesn't have the lowest price because I actually spent some time. I found.
So what would be your investment strategy on this? Given that
Amazon.
Basis? I mean,
short it? I don't know.
What you were suggesting, shorting Amazon?
I just hope that somebody, has the chops to really challenge Amazon and make mimic it, but keep because I think what they're charging people who sell their products and they play all these games, Amazon really isn't friendly to vendors, I don't think.
Yeah, they're becoming the Walmart, huh?
Yeah, except I think the reputation, like he says, you know, for the average person, it's very easy, it's very convenient. You wonder if somebody else, some group of people, group of tech people, can come up and challenge them and undercut them a bit.
Well, I suspect what might lay out there is the government could come in and, you know, so Amazon, you've got to change your behavior.
Break them up like AT&T would.
Well, I don't know what they might do, but that could be something that the government could do. And if there's too, you know, blowback, that might be a risk.
So depend what Jeff Bezos says on the Washington Post about Trump. Because, you know,
They're not
Washington
gonna
Post
like
is owned by Amazon. Yeah, by Bezos.
So how would that work in eBay, for example, right? Like,
Well, I had actually purchased eBay on its IPO in the 90s, so I was more familiar with it. And, but I mean, maybe I just know how to use it and easier. But eBay, I think anybody starting on eBay can sort by price. I mean, eBay doesn't do that. I'm not pushing eBay at all, but it's like, to me, it's much easier. So the fact that I could not sort by price, and then the story of my friend really made me angry with Amazon. So
and do they charge for? They don't need to charge for storage fee just because.
Oh, they charge a lot. I
really
forget the
eBay?
details. No, they charge this guy to store. Essentially, you pay to be promoted in Amazon.
Oh, no, I'm talking about for eBay.
Oh,
Because eBay, you're basically just shipping from my home to your home.
yeah. eBay.
So
That's
that
right.
way-
eBay doesn't have. Yeah, it doesn't have. But eBay just has listing fees. But sometimes they're free because they want to promote it.
Yeah,
And
so
then
I-
they have if you
Yeah, so
sell,
maybe
then
there will be multiple different tiers of those online merchandise or
You think Alibaba?
yeah, or like
take that
Alibaba,
space
Shopify,
at
or
Amazon?
some other companies out there that yeah. So there might be places you can look.
But I mean, the thing about Amazon is, you know, they do make it really, it is pretty easy and it's very, just the format of Amazon is very nice. I
Yeah.
just wonder if, you know, some people who are really bright can really sort of mimic it
And you only look for mainstream items in Amazon. I don't think you go there to look for some odd.
That's right.
You know, like
You're not
special,
looking for an
like
antique
unique
or
item. Yeah.
something really odd. The only other thing I think is real interesting is I saw that, I heard this report that the movie industry is way down. The summer movies are down at least 20%. And it makes me, you know, I'm a Netflix binger. I binge on Netflix. And
That's why they're
I
down.
just, yeah, that's why they're down. And movies are fairly expensive to go to, you know? You go there, by the time you buy the soda, the popcorn, and whatever, you're in $15 or so at least. So I think the thing is,
That's wishful.
I don't know. Also with Netflix, it's very interesting how they make a lot of their own series, and there's just got to be. It's interesting. So much work for production crews, actors, writers, screenwriters. It's all very interesting. But I think the movie industry too, with things like Netflix, Hulu, it's you know. You wonder how much these cinemas are how well they're going to do in the future when people can just for $7.99 get Netflix.
That's right. Don't buy AMC stock.
Right. That's what I think. And that's it. I'm through.
Okay, well, Sasha, you're next.
Hello, it's been a while since I've been here.
Yeah, it has been.
I don't know if I've been here this year yet, but
Now, first, now for 2017. Huh?
okay, so it's my first. I always enjoy coming here when I can.
Everybody's got their own life.
I tried to, some of you know my philosophy, so I try to time the market all the time, not individual stocks, the actual indexes. And so last year was a total loss. I was waiting trying to catch the correction. So when Trump won, I figured, okay, the correction is coming, maybe another 100 days. Well, it hasn't, so. So then after about 100 days, I said, okay, forget this, I'm gonna go long. So I went long, and I do the leverage indexes, which you sort of, if the index goes up by 1%, then my stock goes up by 3%. Or I do it, you know, sort of conversely.
So you mean when it goes down 1%, you lose 3% too, right?
When it goes, well, it depends how I play.
That's right.
If I play long, if it's a leverage index. So,
Both ways,
so I'm trying to, and you can do double, triple. So I'm trying to develop a strategy in which thinking, okay, stock market, it's typically up the staircase, down the other shot, up the staircase. So I'm thinking, okay, so I'm going to go, and if the chance of the market going up tomorrow is a coin toss, then long term it makes sense to go on a triple index long, because there's more days that it goes up. and then go on a double index down because there's less days that it goes down. So I've tried that strategy after about 100 days of Trump's presidency, and it has been working. So I use UPRO to go triple up, and I use SDS to go double down. And so, I mean, it's, you know, I don't put much into it. So that's kind of what I'm trying to develop that strategy. So, and then on the stocks, since I couldn't resist, I tried what Hector did, but I wasn't as successful. When Chipotle had the scare, it had a drop. And I said, okay, this is just, you know, there's viruses everywhere, so this can't be bad. And I eat at Chipotle all the time.
Yeah, that
So
does not look like a good pinch chart. I don't know.
Well, so I sold the put, but I got a sign, and they started going down.
What strike did you sell?
I think I sold at it went down to I think I sold like 330.
Okay.
And then I got a sign.
Yeah.
And then I started selling calls to cover my loss, but I'm still at a loss.
Yeah.
But I still hold it, and finally 3 days ago it started recovering.
Yeah.
So I believe that it has a good future. I like it. You know, I like to eat it. I think it's great food quality and so on. So that's kind of been my strategy on that. And then I also last 3 days, Thursday, when the announcement came that Whole Foods, the drop, the cost per head, I saw the drop in Kroger, which is similar. So Bezos announced that food price is going to drop starting Monday because whole food price is going to drop. And so the philosophy was if whole food prices drop, everybody's going to be leaving Costco, Walmart, and Kroger and going to Whole Foods. So I said, nah, that's, you know, it's too wishful thinking. So I basically just went long on Kroger on Thursday. So that's kind of what
Let me ask you this, just for, what you want to ask?
Go ahead.
For others who heard the 3 times and 2 times, you understand that, right? So you take the risk downside as well. And we know that these, they call them leveraged ETFs, but they carry a large carrying cost. So you do not want to hold them for more than a few days, a week maybe, because they self-consume. They say 3 times, it goes up to right, but over a month or so, it's not really 3 times, it's 2.8 or so because of its control. So the question to Sasha is, how long do you hold it? How long do you hold UPRO or SDS for?
So I think it's the downside is more expensive per day than the upside.
Yeah.
I don't know why, but I
SDS is more expensive.
SDS is more expensive than UPRO.
So you're holding for a week.
I like to say that no more than a few days.
Right.
Sometimes you know it's the psychology, and
Right.
if you have a loss after 3 days, you say, okay, I've got the loss. I'm gonna hold it. Maybe it'll recover. So you get sucked into.
You mean wishful thinking? Okay.
Wishful thinking.
Hope is a strategy.
But think about it. I mean, this idea. So you know, UPRO up and SDS. Now we can talk more later because it seems to make sense if each time the chance of the stock going up or down or the index is always 50%. So this is all gambling here we're talking about. But,
Sure.
But that's all around is what you think. I mean, who knows what's right or wrong? I mean, there's a lot of.
Well,
but
gambling to one person is a hedge to another.
So when you say that one of them is triple leverage when the other one is double,
yes.
So if you do net of that, you basically just got a positive. You basically have a positive delta. So since the overall market has been doing well, that's why you're doing well. But,
yes.
But if the market isn't doing well, you will still end up losing money.
Well, yeah, but that I mean that is a strategy that I review, you know, weekly, if not daily. I mean, this is not something that I buy and I forget about.
Yeah.
So as I anticipate the correction now, I'm going to go to SDS.
But that point,
so I do have to be lucky in that prediction. But I think overall, since the market on average every day goes more up than it comes down, and of course, let's say it's a zero-sum game and it corrects to zero, then it makes sense to go a triple index on the up and maybe just a single, just a regular index on the down.
Because it goes down, as I said, down the
like
elevator, up the escalator.
It's like a hedge. Like you got long and then you got small.
Yeah, but when it goes down much faster. So the 2 times works just as well as the 3 times up. 2 times the 2 times down works as good as the 3 times up, so to speak.
Yeah, I mean, I don't know why
Not much faster.
it doesn't indicate from here, this is 2 times.
No, it's 3
3
times.
times.
This is 3 times.
3 times the S&P 500, yeah.
Okay, so it doesn't really clarify that, what, I mean,
So you're,
it's scary. I mean, I'm just speaking for myself. That seems to be really scary because I have really no idea how these things operate.
That's why I hold on one for a few
Yeah.
days. Yeah.
so your strategy
But everybody's got
is
your own angle.
based off of trying to gauge when a correction is coming.
Yes,
So
yes.
how do you continue to have that strategy and like behaviorally engage with that when earlier the reason why you said that you started doing it was because that you felt like a correction had been coming for a long time and it didn't happen. So how do you like day to day review and try to understand and I guess when a correction is going to happen? Like how do you do that?
Well, I think it's an educated guess. I mean, generally, if there is a huge gap up in the morning and it continues to go up, let's say the S&P 500, which happened, and I'm anticipating, so my overall philosophy is there is a correction coming. Then if there's been like a 1 or 2 days going up, then I will go short. And then if I miss it, I will sell it and so on. So, and then let's say if then the correction didn't happen, then I'll go long again. And now if I'm right, then I will gain 3 times more than twice that I've lost. And I'm still developing it and so on, but I'm trying to look at it mathematically. I mean, if I just don't know, and if I'm equally wrong, if it's tossing a coin, then when I'm right, I win 3, and when wrong, I lose 2. Mathematically, it seems to be work. But there is the cost of owning it, which I was saying. But the added benefit of UPRO, there is a dividend too. So if you happen to hold it on the ex-dividend date, so the bull index has a dividend. Yeah, it's a small dividend, while the bear index does not.
I mean, let's put it this way. I suspect that not everybody knows about the dividend. Somebody who did really know about it might have a little edge, so to try and trade it to get that dividend. I mean, I don't know, but that would be a guess. Because I think a lot of people are going to be very confused about these things, and if you know more about it than they do, that will give you an advantage. But is that it then for you, Sasha?
Thank you.
Okay, there in the back of the window, the beard.
We got another contrarian stock for y'all this week. It's in line with American Tower, so it's Unity. It's Unit, U-N-I-T.
Telecom one?
It's related to telecom. It's a REIT.
That doesn't look like a Vince chart to me, but I don't know.
Came
out of Win Street, right?
They're out of Win Street.
I own that,
That's a monster yield. Wow.
So this is, again, infrastructure REIT that was spun off of Windstream, which is a telecom.
Right.
And basically what happened is Windstream is a struggling telecom, and part of the way that they've tried to manage their debt was to spin off a significant portion of their assets, which was mostly their fiber network. And that spin-off is Unity, this company. So this company mostly owns the real estate that is of fiber value. They also started owning towers as well, cell phone towers in the US and down in Central America, South America. And you can see the chart. If you pull up Windstream, also WIN, you'll see that they're basically trading in the same pattern.
Yeah, WIN.
And what's happening is
The fat dividend as well. Look at that dividend.
Look at the dividend.
Gary, look at that dividend.
Well, they cut the dividend. They actually got rid of it completely.
Oh, 30%.
So
Wow.
it's trading. Well, the dividend's gone now. That's what it was.
So that's out of
It's
date.
completely gone.
That's
But what's happening is that the dominant thesis on this is that Windstream pays rent to Unity. So there's concern that with Windstream's decline, that they're not going to be able to pay to use the fiber of Unity. And that's why they've been kind of trading in sympathy with each other. I think that that's incorrect because the fiber network that Unity owns, the real estate that Windstream pays to use, is absolutely critical to the company. There's no way that Windstream, even if it goes into bankruptcy, if it goes into Chapter 11, there is precedent that those types of businesses continue to pay for the infrastructure, because if they don't have the fiber, they don't have a business. They would have no way to service their customers. So there's a number of precedent in the past with telecoms that go into bankruptcy that still pay for the assets, still pay their landlord essentially. So I think the sell-off for Unity, which is down I think 30% this year, is it's just misguided, and it misses the point of the difference between being a landlord and being dependent upon the revenue of Windstream. So that's part of it. Additionally, there's the fiber value, the asset value of the fiber is, I think, about double. It's like $9 billion if you do an estimate, which is about double the market capitalization of the company. So even if it continues to go down, where there's a strong asset base beneath it, there's also the 12% yield that you're getting while you wait. I think likely the price target that I have around this is around $30. And
how strong do you see that dividend holding?
It'll hold. Unless, the only reason why I wouldn't hold is if they decide they want to use some more money to reinvest in growth. But their funds from, so most REITs, you kind of look at the revenue side of it from a funds from operations. So the yield is $2.40 annually, and the funds from operation is $2.60. REITs are required by law to pay out 90% of that. So the likelihood of the dividend getting cut again, I think, is more dependent upon if they decide to reinvest in growth. But from a financial standpoint, they'll be fine. There are risks.
So you would stay away from wind altogether?
I haven't done a deep dive on wind. I'm not sure. It might be a good opportunity since they have dropped so much and they've cut their dividend, which allows them to repay their debt better. But the population of people who traditionally were invested in wind, or the dividend investors, so they cut their losses and they get out because they're not getting that income stream anymore. So it creates a buying opportunity for different types of investors. But I don't know.
I mean, yeah, that's what you think. I mean, who knows if that's true or not, but that's what you think.
Okay.
So is that it for you?
That's what I got.
Okay. A lady next to you.
Yeah, it's your turn, so I'll pass my time. Thank you.
Okay. And next.
I did not change any of my positions. But one thing I want to brought up is on the selling side. I always mention like 50-day line. You should watch 50-day line, and the stock
moving
is,
average.
Yeah, the moving average, and the stock is coming down 50-day line. For example, stock sticker is Alta Beauty, ULTA.
ULTA.
Yeah. Yeah. I sold. This is one of my favorite stock. So I sold this stock long time back. So now if you look at the chart. So I sold it like.
Not a beautiful stock,
yeah.
is it?
Oh wow.
Yeah.
I mean, sure.
Yeah. So I sold it.
High volume too on it.
Yeah. So that's what I wanted to bring out to the.
What's your recommendation?
My recommendation: I don't buy this stock. I am out of this stock long time back. So.
What is this?
Alta Beauty. Yeah.
Makeups and stuff.
So just wanted to pay 50-day line moving average when the stock is coming down below that. That's it.
Okay, Sam, you're next.
Nothing.
Okay. This is my sister Lynn Rast. She's here from South Carolina. Want to say anything, Lynn? Or?
Hello.
From North Carolina?
South. Eclipse that.
Yes.
Oh yeah. So that's just you're here to listen and learn, huh?
That's right.
Okay.
How's Gary doing? Okay.
We're swinging back. I mean, Josh slipped out on us. I got to get back to him. But right now, I skipped you the first time. So
Sure. So I don't have a strategy at the moment. I'm here to fine tune mine. So right now, all I'm really doing is I have a basket of stocks. Some of them are generating dividends and some of them aren't. So whatever the dividend is, I'm basically holding it in cash, waiting for a correction. That's a general broad brushstroke of what I'm looking at. But Deep dive wise, I'm kind of outsourcing some of my homework on that kind of stuff. So I teach business intelligence with advanced Excel for UCSD out in California. And one of my assignments, the whole class is I have the students pick one company. They go to the SEC, they get a 10K, and they do a deep dive throughout the course. But I have them kind of pick what company they want. But I think next quarter what I'm going to do is, okay, well, here are the stocks I want you to look at, and those are the ones that I'm going to be holding. so I'm going to cheat a little bit. So that's some of the things floating in the back of my head right now. But I'm very happy that I found this meetup to kick some future ideas around.
I mean, yeah, it's what everybody thinks. I mean, who knows right or wrong?
Right.
I mean, that's what they think.
What does deep dive mean? Deep dive?
As opposed to just regurgitating the headlines or something like that sounds sexy. I mean, looking at their financials and looking at what their competitors are. And
you'll appreciate what Josh has to offer. He's a
really
good
investor.
Yeah.
He goes 30,000 leagues under the sea.
And I'm proud of it.
Somewhere.
I'm sorry I missed your earlier
Yeah, I
presentation.
mean, so is that it? then for
Yes,
us?
sir.
Everyone's. John?
Yeah, I just wanted to, if I could say it, because I do have something to say. Can I talk or?
Yeah.
you don't-
Well, I still have the agenda
That's
over
fine.
You still
here.
got your turn, John. Go
I'm in
ahead.
favor.
Okay, because I'm sorry I got here late, but I told you when I saw the Motley Fools do something, I tell you, they recommended JD.com, and I think you and I have talked about this before. I know you're in ABAB, but yeah, but they feel this is more of an Amazon.
Is it Jet.com you mean?
JD.com. Sam, what you could tell me about it? And
What's the symbol?
JD, and they're
JD.com or is it?
it's just JD. It's just JD, but it's a company called JD. I don't know. It's an Indian company. It's they feel it's more of an Amazon direct than Alibaba. It's come down, and they were recommending it. Well, again, I told you some folks have a higher subscription than I do, and so I'm getting this secondhand. But probably those folks were in the stock at 25. But they started at my level talking about it at 40. I do remember bringing this to the group's attention in the Insight Investing, which I send you, those articles, and I talk about small companies. And JD was mentioned there, and I think it was in the 30s. I think I asked you about it, and you said no, you were with Alibaba.
Yeah, John, that's a very highly traded, large.
Well,
50 million shares a day?
I'm just saying that they recommend it. You might want to look at it.
Very liquid.
Yeah. The other thing I see on the board, you mentioned AMT, which is American Towers.
Yes.
American Towers. I kicked myself in the head. I owned American Towers at $71. It sold it at $90. American Towers, a friend of ours, his son is an attorney, and he worked out the deal with them. And they're very much a growth-oriented company. They're big in Latin America. This man's mother is from Brazil originally, and this young man, and he closed a hell of a deal with them, with the Italians, and they're growing in Latin America. I'm not sure other parts of the country, world, but that company, I know it's a little high there, but that's probably a good one to get on the dip if you can. And then, let's see, what else? Noel, last week you weren't here. I don't know. So that's just something to think about. Okay.
Okay, we need the gentleman here in the corner. Mr. Board, do you want to say anything?
Sure. Oh, by the way, what you just mentioned, the South African cell phone company MTN did something similar to that. Because the Iranian sanctions, they tried to use oil as to get their money out of the country, but they got in some serious trouble for that. So,
you turn your thing on. I just don't know who's listening here.
I bought some Facebook stock.
Well, I think KGB, obviously. You don't want to get, or FSB.
You never know.
Who was that talking bad about him?
I bought some Facebook stock. I doubled my position.
Bring up FB there, Vince.
My analysis might be a little shallow for you, but
Hey, what do you think?
Yeah.
Everybody, that's what we want to know. What you think? Announce or not? We don't care. It's what do you think?
I mean, I'm new to this, but I would like to consider myself a value investor also. I don't see any competition for them, not in the United States at least. I mean, I see there's some social media platforms in like China, but I don't think they have a cultural push like the United States does. They seem to have a lot of money in the bank, very little debt. So it seems over the long term, it will be a good company to invest in. So I'm thinking like years. So just keep buying over years. Yeah, that's about it. You made a point about the movie industry going down. What I've been thinking about lately is if anybody knows of any way to invest in like the Chinese film industry. Because has anyone heard of the movie Wolf Warrior 2 that just came out?
Yep.
Yeah, it's like washing the box office. It made like $600 million just in China. I mean, this could be a reason why Hollywood profits are going down. Like people are making their own movies. I mean, China's a big market. So
I would invest in Netflix. I did.
oh, okay.
Good option.
Oh, yeah, I actually asked about that last time I was here about the debt. What are you concerned about Netflix having?
Is that it then for you?
Actually, I have one more point. A guy last time I was here also mentioned pets. PetsMed. So I was thinking about this. I do a lot of research on like personal and demographics change. And it's very interesting.
EETS.
Just kind of anecdotally, I mean, I kind of feel like this industry would be something good to invest in because it seems like millennials are not having kids anymore. And they want dogs. Like most of my friends, they're not even talking about, I mean, we're in mid-20s hitting 30. They don't want kids. Everybody wants a poodle or something, a pit bull.
Or Samoy.
Yeah, something. I never heard,
The fluffy ones.
Yeah, and I don't. So I guess child insurance industry is going to be replaced by pet industry. Yeah, so all the businesses that include children, you just replace them with pets on your portfolio, and you should be okay, I guess. Yeah.
All right, that's what we want. And what you think? Is that it for you?
Yeah.
Paul, I think you're last up, and then we'll go to Vince.
I still have a short position in the SDY.
Short position.
I haven't been doing trading this week.
All right, so is that it then for you?
That's it.
Vince, you're gonna wrap it up there. You're gonna
I
be gone
didn't
next
buy
week.
or sell anything, but I gotta say, I've got a lot of respect for value investing as well.
Great.
I usually like to buy the kind of stock where the earnings are expected to go up. Not earnings that already have gone up because that's already reflected in the stock. But looking forward 6 months to so many years ahead, companies whose earnings are basically going to increase, I think the price will increase. And I kind of like to keep it simple, just plain, I buy stocks, period. I don't fool around with options. I don't do anything,
Everybody's got their own
particularly
ethics.
clever. Just look at stocks that I think earnings are going to go up. But I look at what the analysts are saying. My account is with Fidelity, but I think Schwab is just as good. And there are probably others too. There's a tremendous amount of information you can get regarding estimates of what's going to happen with many companies in the future. And you can get a tremendous amount of data as well. I like to buy a stock where the debt of the company is, say, less than 50% of the total capitalization. So low debt, expectations of growth, and pretty much the kind of stock where the price moves like this and not like this. Okay? So I like to buy high capitalization stocks. If it sells on the average of about 300,000 shares to 500,000 shares and above per day, I'll look at it. If it's a thin stock and if it's about less than, say, $8 a share, I don't even look at it. Also, I find that companies that are selling at about $70 a share or higher, they move so slightly that I don't get interested in them, so I look at $8 a share up to maybe $60 a share.
What's wrong
You
with
got a
stocks
high
less than $8?
High
There's a
capitalization,
group out there.
okay,
Well,
that's it.